Let me just let me just clear this in this way. A lot of people are convinced that they need to pay off their properties, even the ones that they are renting out,
Okay.
and which is not working for them because. And I'm sure a lot of people that will be watching this can attest to this who have properties that they're renting out that are paid up.
Sure.
You end up working for SARS. Because remember, if your property is fully paid up, your rental income is fully exposed for tax purposes. And this is not a cliche. This is the reality of things. The rich will tell you, don't use your money to buy investments. You use the bank's money.
But do you feel like a lot of people know this?
No.
This like homeowners, people building their property portfolios. Do you feel like they know how to claim their expenses against, their income tax?
I can confirm that most people don't know. I don't know how many friends I've had that have asked me, like, how do I claim this stuff because I've been paying for? And I know a number of friends. Actually, one of them who used to work for SARS. So I was surprised when they said,
Hello guys, how you doing? Welcome to Success Inspiration Academy. So a lot is happening, guys, and I'm here with Mandila. Okay, how are you doing, bro?
I'm good, man. Good, can't complain. How are you, Hendrik?
Awesome, man. Man, I never thought I would be friends with someone who's actually worked for SARS. You know what I'm trying to say?
Dreams do come true.
I've never thought. I'm like, these people, where are they? Who are these people who work for SARS, man?
Yeah. You're not the first again. Yeah. But a lot of people always have that expression. Oh, you guys do exist.
Awesome. So, guys, man, a lot of things are happening. Man, it's what a time to be alive. What a time to be alive. A lot of things are happening from Trump's tariffs.
Yeah, that's madness.
Man, Trump's tariffs. Right now, we are stared right in the face. With value-added tax increases coming on the 1st of May. A lot of things are happening. I know there's a challenge right now from the DA with regards to that. But I don't know whether that's going to work or not. And man, this thing has been very contentious. But today, guys, what we're talking about right now, we want to talk about it from a property point of view.
Correct.
Right? I know you guys, a lot of you guys, are interested in buying property. Maybe some of you are already in the property space. What do these increases, mean for you? So guys, we're super excited to be here. On this channel, guys, what we are passionate about is to plug you with the significant information that you need, to take your life to the next level. So man, you know what it is, guys. If you love this channel, you find value in it, hit the like button. You already know that this video is going to be good. Hit that subscribe button so you can know next time that we drop. So bro, man, I know you're in the property space.
Yeah.
You're in the tax space as well. So I'm sure you get excited. It's like I get excited when we're talking about labor law and constructive dismissal, whatever it is. I get excited because that's sort of my field. But you are in this space and you've developed a property portfolio, now looking at 6 properties yourself, which is a story for another day in terms of how you can actually do that, right? But tell me, man, what does this mean, this situation with VAT? What does it mean, for the ordinary property buyer, or what does it mean for the property space? I think let's maybe take it from that angle.
Yeah, actually, that's a very interesting question. Thanks for that, Henry, because it actually always gets down to, so what happens with VAT? VAT is an indirect tax that gets pushed to the end user. So it's always going to affect the end user. So whenever you think about, once they say there's an increase in VAT, you just know whoever's going to be using the product is going to be the one that's going to carry that burden, the cost. So
Awesome.
in the property space, then the same impact is going to be felt. But I'm sure we will break it down layer by layer, because on the overall outlook, we always look at this is going to have a negative impact because the prices are definitely going to go up. So remember that your developers now are going to spend more money in buying the materials, because the material that they use is going to be vettable. So that VAT is going to have to be passed on to the end buyer, who is going to be the purchaser, whether you're a first-time property buyer or you're going to be there already. However, it's going to be the new properties that are going to have this impact. We can talk about it later, because of those who already have, or who have already bought their properties, they won't feel this, because of those who already own their properties at this particular point. They're not going to actually feel the VAT increase, unless also they are selling, and the value of the properties that they are selling will be within the threshold that is below what you pay transfer duty on. Because remember, anything that's going to be 1,210,000 now, going up in terms of property, is going to have transfer duties on it. But anything below that then has VAT implications on it.
So what does it mean? So if you are sort of from a action point of view, if you sort of want to buy property, or you want to sell property which is above the threshold, what does this mean for you? If you were sort of trying to make a move in the market right now, what's the sentiment?
All right. So the sentiment at this point is going to be, for someone who wants to enter the market, you have to then reconsider your affordability. Because remember, it's not just one thing that's going to be affected right now, but it's going to be your cost of living generally, because of your VAT is going to affect more than just your repayment of a bond at this point. It's going to affect the money you use to pay for your school fees, the stuff that's going to be any services that you actually also get to incur right across. So that means what you thought you could afford before the 0.5% was affected, right now is going to change, because of you have now a 0.5 on top of the 15% that's going to be added. So that means if whatever the numbers were, so that we don't get into specifics right now, but whatever the numbers were, one needs to go back to those numbers, look at also the value of the house is going to go up right now, as I've already said. So because remember, when the cost of building the houses, which is what the developers are going to be spending now, is going to be more, that's going to be pushed to the price, or to the purchase price for the buyer. So that means the price of the house is going to go up. Probably the rental amounts also are going to go up a bit. But I think what's going to happen now due to this is that there's going to be more demand for rent than for buying. Because the effect is going to be different, and it's going to be less on the rent than it will be on the purchase price.
Awesome. And tell me, man, so obviously when one is paying a VAT, right, you can always like reclaim your VAT, right? Or maybe, I know, obviously from a layman's point of view, right, from the streets, this is what we've heard. But unfortunately, we've got the tax expert here to tell us, hey, my man, this doesn't work like that. Because you're thinking, why does, if everyone else can then, claim the VAT, whether it's developers and the likes, why is it immediately pushed on to the consumer right now? And even if you are the consumer, let's say you're buying property, is that the VAT portion is there? Can you claim that back though?
No, so I was going to explain that.
Let's go into it.
People who are able to claim back the input VAT, which is the VAT they pay on the expenditure that they incur, are VAT vendors. So you have to be registered with SARS for vendor, and
individuals are not.
Well, you can be an individual and be a VAT vendor. So the criteria is you in order for you to have voluntary registration, you must be making revenue of about 50,000 taxable, vettable sales. So it must be a minimum of 50,000 rands within 12 months, and then for it to be compulsory, you have to be making 12 million taxable supplies.
So are you saying to me, suppose you're talking about
sorry, let me fix, not 12 million, 1 million in 12 months. So 1 million in 12 months of vettable supplies.
So we're talking about an individual.
Individual and business.
So there's business. So my point was, if as individuals, right, in our personal capacity, I haven't met someone who says, in my personal capacity, I'm registered for VAT. Is this possible?
Yeah.
All right. So you would say that if you are sort of working as an independent contractor,
Yeah.
would you say? Where does this really apply?
Yeah,
When you're-
well, doctors, lawyers, you remember that most of these guys run their practices on their individual capacity.
Oh, yes.
So then they would actually be making sales that are way more than that, and then they would actually have to effect VAT on their supplies.
Oh, okay, so those guys can reclaim.
Yeah. Once you have a VAT number, so there's a host of statutory requirements. For sure, that comes with it. You have your statutory requirement to submit returns, whether you're making sales or not. But then, on a periodic basis, you have to do that. Before we get to you then claiming that input VAT, and you actually have to first declare your output VAT on the sales that you're making, if you are making vettable supplies for sure.
Okay.
But without us actually getting too technical on that, but yeah. So, but if you don't have a VAT number, or you are not a VAT vendor, then you can't claim that.
Then you can claim. Okay,
Yeah.
so basically, so what I was asking is, if these, developers can basically, so it's the developers, but also if you are selling a house,
Yeah.
which you said it's above the threshold,
Yeah.
it has to have VAT. No, if you are registered for VAT.
Yeah, if no.
Let me say I'm a home seller. I'm just
Okay,
trying to
so
sell
you
a
are
house.
selling.
Yeah.
If you're an individual who doesn't have you are not a VAT vendor.
So you don't charge VAT.
No, you don't.
Otherwise you'll be arrested.
Yeah, exactly. and remember, even those who charge VAT, they charge it on behalf of SARS.
Okay,
So yeah,
so you have
still,
to-
there's no
yeah.
benefit in that. So.
VAT. Yeah.
Yeah,
man.
so as an individual, you don't, whether it's transfer duty or it's actually VAT, you don't benefit in that. You actually don't charge it. You'll actually just see in the registration process. Then the lawyers will tell you how the whole process goes. But yeah, in short, you don't charge VAT if you're not a VAT vendor.
Awesome. So the question is then, why don't just developers then reclaim VAT when because they are paying more VAT on the supplies? Why don't they just then reclaim it as and when?
Well, it's the nature of the tax system first that they have to, because remember again, so they would actually spend this money on their suppliers for materials, raw materials, and all of these things. Then they would actually want to claim that against the VAT that they're going to charge you if ever now they're selling to you a house that is below that 1,210,000 and less. So when they sell you that, they have to charge you VAT. So
Okay.
when they then charge you that VAT, they have to declare to SARS that we've collected VAT from Henry, but then they also have to set off the VAT that they've already paid. So there's no benefit with them then actually them actually charging you VAT. Unless the only time that happens is when they actually are developing your zero-rated supplies. So there are residential properties that would be zero-rated, but then because of their inventory or their stock for the developer, then they have to charge VAT on it. So if it was not stock and it was residential, for me and you, it actually is zero-rated because of we're not dealers in property. We sell once
Yeah.
in a while. Yeah.
Awesome. So tell me, so the issue here is you're saying that it's really new developments and the likes. So what would basically if how robust right now is like the rental market? Let's say if you are buying to rent, you're working on developing, growing your property portfolio, growing your wealth with your with the property, Are we seeing like these costs right now being covered in the rental market? If you're going to, just push, say, okay, I'm going to, buy my property and put it out for rent. Are we in a situation whereby we're actually covering those costs, or the rental market is also a bit flat, stagnant? How is it looking like?
Yeah, so for the rental market is actually governed by different rules from buying and selling. Because remember, but your agents would actually give you more detail on that. So normally, what would happen with your rental space is mostly for residential. The rent is normally like a percent of your total bond amount. Generally, it depends also what the demand looks like and all of that. And now that's just to deal with the rental aspect, but also then whatever other consumables that the tenant will actually be be using in the house, like water and garbage collection and all of that, they'll be paying that towards whoever the investor is. Then for the investor, it depends again, at what level did you rent your property out? So you could have actually had your property for a while, and most of the time you would be on a cash positive there because of what you're paying back to the bank is normally lesser than what the rental income is. But if you are renting out property that you just bought, you are likely to be on the cash negative. Cash negative is that you might actually have to supplement that because what you are getting from the tenant with the other municipal costs and your homeowners association
Levies
costs,
and stuff
then it
like
actually
that.
goes beyond. But it's for a period of time because remember, as things go, rental income goes up. Your bond repayments are actually staying stable, but your outstanding liability with the bank goes down. So over time, you see this split, your rental going up and then your cost to the house going down. Then you actually get to be more on a profitable space. So that's where you get to cover more of the cost that you are incurring. However, whilst you are making losses, whilst you are not cash negative, that's a positive for you when you are submitting your tax returns. That we said we'll talk about some other time.
Yeah.
But that then becomes a positive because you get to claim all of those expenses that you are incurring against your
property.
your tax income, your income tax, sorry.
Or your income tax.
Yeah, when you're doing your submissions, probably around about July, August, as an individual. And then, but if ever you're doing it as a business, again, when you're submitting your tax returns for your business, then you take those into effect when you are declaring your rental income. Then you also get allowed to deduct your rental expenditure.
Wow. So in terms of so just thinking about it as well, one thing I realized is, when you are looking to get a property, as you're saying, this issues of cash negative, cash positive.
Yeah.
You really need to be able to plan your finances, plan your cash flow, because as you're saying, just thinking about it, I realized that back in the day, right? I think one of the things when you're buying a property, you think, okay, once I bought a property and I've paid it off, that's it. But it seems as if you can never actually afford to get broke if you've got a property in some places. Because I'm thinking, some of these complexes, right?
Yeah.
You see, like they're levies.
Yeah.
Obviously for security and all these things.
Yeah.
You might be looking at 3,000 for
Yeah.
some places, median. I don't know the other big estates and whatever it is.
Yeah.
So do they also add VAT on that as well?
Yeah. So you will actually see when you check your statement, you'll actually see that they will actually charge you VAT on those VATable supplies because of their VATable. So the VAT Act is separate from the other acts. So it's got stuff that is listed as these are VATable supplies, and then these are non-VATable supplies. And I mean that's for people who want to be specialists. But for now, so the services that they render though, they actually do have VAT on them. So you pay VAT on that. You will see actually now after the first.
I already got an SMS
Yeah,
from Vodacom saying that, hey, by the 1st of May, things are going down.
Exactly.
We're changing our structure, our fee structure.
Yeah, so you have to effect that. That's one of the things. So now, even if you already got the increase for the annual increase because of they increase them annually, now you're going to have to expect a VAT increase because of that's going to then be what's going to add to what you have to spend towards your homeowners association or your levies in the complex now.
So just from your point of view, what does this mean for you in terms of your property situation and your portfolio, like this VAT increase?
So for me, I think firstly you spoke about the aspect of cash flow. So it's very critical for one to work within their affordability. You know how much money you have access to. Now, when you buy a property, you know that you're actually going to have a certain amount of your money that's going to be tied up for a long period, right? So you take that into effect because when things like this come up, you need to factor that to ask yourself, am I still okay cash flow wise?
Yeah.
Because I'm going to have to field whatever this is going to bring now. right? Because I can't adjust my rental income, which I'm charging now the tenants by virtue of this tax change, because you increase your rental charge on an annual basis. So whatever changes in interest rates, in taxes, you have to absorb those.
Sure.
And then for sure it might affect things in the future, because of, even if there's a review, again, there's an annual review, then whatever you get to increase your next rental income with for your tenant is going to be based on what factors affect the contract that you had. So right now I'm going to have to carry the increase on this VAT. However, it also is going, remember now for me, when I carry those expenses, I get to then claim them back later on in the year. Actually, for this year, because we're already in April now, so I'll claim it in the next tax cycle, year of assessment, which is going to be from March 2025 until Feb 2026. Then I'll actually run about July, August again of 2026. I'll have to actually add all of the expenses again. Documentary evidence is very key.
Okay.
So all of those are going to then substantiate my claims in 2026.
Awesome. Because I actually met a guy this other day, a few days ago, probably within the past 2 weeks.
Yeah.
But he was selling, his property. He says that he has, I think more like you. He probably was talking about having 6 properties.
Yeah.
But he was saying that he was selling that one because of the interest rates.
Okay.
How the interest rate, the increases are actually, they end up paying more in terms of their mortgages.
Yeah.
Every whatever, as and when the rates increase.
Yeah.
But for that person, wouldn't like what you are describing with regards to claiming against your income tax, wouldn't that help them?
Yeah, it would. So again, for them, I understand they are affected on the cash flow. So it goes back to the cash flow because of now your month to month is what is affected, though you then claim back once in a year.
But do you feel like a lot of people know this?
No.
This like homeowners, people building their property portfolios. Do you feel like they know how to claim their expenses against their income tax?
I can confirm that most people don't know. I don't know how many friends I've had that have asked me, like, how do I claim this stuff because I've been paying for? And I know a number of friends. Actually, one of them who used to work for SARS. So I was surprised when they said, and they said, "No, man, I've been." So let me just clear this in this way. A lot of people are convinced that they need to pay off their properties, even the ones that they are renting out, and which is not working for them because. And I'm sure a lot of people that will be watching this can attest to this, who have properties that they're renting out that are paid up.
Sure.
You end up working for SARS. Because remember, if your property is fully paid up, your rental income is fully exposed for tax purposes. Unless you've got small expenses like your levies and whatever, it's not as significant as the interest expense that you get to claim. This is why the rich are always saying, and this is not a cliche, this is the reality of things. The rich will tell you, don't use your money to buy investments. You use the bank's money.
Okay.
Because you want to have the cash flow, right? It must be at your disposal. Then you actually access the money from the bank using your money as an asset against which you actually are borrowing. So as to actually manage the risk that the bank could actually attach to you. Then you actually use their bank's money in order for you to incur interest expense. The interest expense is for you to reduce your tax exposure. And people don't understand that.
I mean, we don't, because I'm saying, dude, I want to own. You said it's not. I mean, that's what we want.
And that's the problem.
We
The
want
obsession
to own.
is the obsession with owning. And I think, again, people don't, and I've seen on some platforms, people keep saying, yeah, stop saying you own the houses.
The bank's houses.
And they don't understand, because if you go to your international accounting standards, now this is what you use in your businesses as well as your personal capacity to recognize stuff. When you recognize your assets, you use those standards in order for you to have your financial statements prepared and how you actually, because of it's I'm trying to think now, what's this term? Something over form, substance over form. Yes.
Yeah.
Substance over form is I'm using the house. The bank does not use the house. I enjoy the benefits of using the house. It's mine.
Yeah.
And remember, I'm registered So anything I'm paying for it on a monthly basis. We all have this one. Most of us have your car.
Yeah.
Do you own your car when you get it out of the dealership, having actually used the bank's money to own that? No, it's in your name.
Yeah.
You maintain that. You enjoy the benefits of driving it. If it gets hit by, you insure it, right?
Yeah.
So all of that, those are the benefits of you owning an asset. So an asset is a resource which you own
And you
to
can
past
use.
events. Now I'm giving you an accounting definition of all of this.
Yeah.
So you actually are enjoying the benefits of that asset. So people, and again, the equity, which means the increase in value in that asset
It's accounted
is
to you.
due to you.
Yes.
So for me, if it was not yours,
Yeah.
then we would be telling a different story. So
Yes.
for me, I think people get an obsession of using, and I just don't feel it's a valid argument, because people don't have facts around that. They just throwing this because I'm sure they're trying to dim your light.
Yeah.
So you must just make sure that you understand why this happened. So people who don't own are people who are renting. That's a different story. There, there's nothing due to you. Whatever you pay on a monthly basis, you lose it. Again, I'm not trivializing the importance of renting. Right now, knowing what I know, I would actually go out and rent anytime, because of what I'm paying when I'm renting is way less than what the owner pays.
Okay.
Yeah, that's a story for another day. So
Sure.
but so yeah, so
What I always wondered, I
Yeah.
said to my friends, like, you know what? Why do these people, right? And I think it was AKA,
Yeah.
when obviously when he passed,
Yeah.
and people say, it came out that the house in Bryanston, he was actually renting the
Yeah.
house, right? And I think I had a question to say, wouldn't it have been easier just to actually to get a mortgage, right? And take occupancy of that house, or buy the house rather than rent it? Because there are few people who actually do that, who actually rent these houses instead of buying the houses. What are your thoughts?
again, you see, and that's normally the analysis. And the reality is, because you would actually think someone who's paying 40,000 is paying a lot, but if you then get to see the value of the house that they are renting, it actually might be more. It might cost the owner more than what that person is paying.
Sure.
So that's what I'm saying then. So if you rent, you know that I don't have an interest in actually taking up all the trouble that comes with this property. I just want to make use of it for a particular period of time. And probably it might be the owner is somewhere overseas. And they're just thinking, you know what, I just want something that's going to come from this property whilst I'm actually not using it. So it's not that that person is not being wise, but maybe compared to the house that they would actually own if they had to buy one. Remember, the status of AK at that point in time would have demanded that he owns a house in a few million, in tens of millions, if not almost 100. I don't know I don't know what their lifestyle is. But now, for you to actually get a mortgage at that amount, then taking into account all the cost that comes with that, then you actually just think, I might as well. You don't have registration fees, you don't have transfer duties, you don't have all of that stuff, and that's upfront. So that means you save, if you pay 40,000, like 40,000 is nothing actually, because at the end of the day, when you look at it, you're like, no, actually, this is actually better.
Wow. So someone would ask then, right? So
Yeah.
so what's then the out? If you are saying that it's not worth it fully paying your property.
Yeah.
So what's the out then? How do you then get out of it in terms of then you have an asset, like just because that's what people think, right?
Yeah.
To say that you need to own these assets,
Yeah.
and they give you some passive income.
Yeah.
That's the word. So where do we then close the loop then?
Yeah.
So that, because we know, for example, in normal course of life, we don't live forever, right?
Yeah.
Then you want to then leave something for your kids or whatever it is.
Yeah.
Take us through that.
All right, so yeah, normally the benefits are very different, and that's why this is. I mean, we trying to give people snippets, and I'm hoping that they actually just keeping adding to whatever that they actually have as a bag, to just add the information that we're giving them. So the benefits are always different because, for sure, someone said back in the day, whenever you buy a property, you must at least have two exit points from it. It's either you're going to rent it or you're going to sell it. But whenever you actually just feeling, now you might need tomorrow to make a decision about the property that you own, right? So you must have an idea that if I had to rent this property out, it would be able to carry itself. That's the first one. Number two, if I had to sell it, at least I'd still get the value for which it actually it stands for. So that's for you to exit if ever you get into any form of trouble or anything like that. And then you can also, banks now want you to have a life policy as well. That also covers should something happen to you, if ever these properties are in your name. I always talk about formation, which is when we talk about structuring, like getting your properties under the name of a company or a trust, it's a different story, right? We don't have the time to talk about the benefits for that. Again, don't just do that because risk is everywhere. People always say, yeah, no, it's risky because of estate duty. Yeah, for sure. You might die tomorrow. We don't know. Or you might actually live 100 years. And that benefit or that thing you are scared of might never actually get to play out. So if you are just going to take long-term decisions based on something that might never happen, it's going to be a problem. Also, again, then if ever these things are in your name, so that I actually bring this home. If these properties are in your name, understand why not paying them in full is all about. I cannot go beyond the fact that there's a tax benefit. Tax benefits, it's not just one. One, the interest that you get. Number two, it's if you have R1 million, let's say, if you have R1 million, you want to buy a house worth R1 million, don't buy it cash. I repeat, do not buy it cash.
Okay.
Why? Because if you take that R1 million, you commit it to that house, you don't have money. And you're not going to have money for as long as you're going to own that thing, right? Because it's tied up somewhere.
Yeah.
Yes, you have that deed, that title deed. What are you going to do with the title deed? But guess what? If you have R1 million, you want to buy a house that's worth R1 million, you go to the bank and tell them, listen, I want to buy this house. I got collateral here. You guys then can give me that R1 million. The bank is going to give you that because they're like, yeah, you can afford this, all right? They give you that. Guess what? You're gonna pay 3 million over 20 years if you stick to that. It's an option. Again, that 2 million is at your disposal to deduct against taxes if you are going to rent that property out, right? But you have R1 million that you can invest in something else that grows faster than the real estate.
Yeah.
So you can actually go buy your S&P shares. You can actually, so you go to your financial advisor then, and you actually ask them, how do I grow? Or you actually take half a million, and you do that. Then you have half a million. Close the car.
Yeah.
Again, your month-to-month cash flow improves. Because if you close a car that's worth 500,000, now we're looking at about what? 8,000, 9,000, that's free. So that means your life is getting better. So the decision-making process is not a matter of popular demand or popular statements. Yeah. Populists are always going to say something. But the facts need you to sit down and peel this thing layer by layer. And then you're going to see, and it's not the popular stuff that works.
Yeah.
It's the stuff that hardly anyone knows.
Sure.
Yeah.
Wow. Yo, man, thank you for that, guys. This has been an amazing discussion. We will be back again talking more property. That's what we do, and we're going to be talking more about that. So, man, if you enjoyed this video, guys, hit that subscribe button.
Yeah.
Share this video to someone else, guys, and we'll see you in the next one. Cheers. Bye-bye.